What's interesting about Coca-Cola is that for every dollar paid, nearly a quarter goes to profit. My name is Andrew Stotz, and let's get into this case study. First, a little company background. The company has its origins in Atlanta, Georgia, in 1886 by John Pemberton, a pharmacist. Now, let's look at the unit case volume. We can see first that 17% of volume comes from North America, 28% in the European markets and Middle East and Africa, so Europe, Middle East, and Africa, and then 24% in Asia, and 27% of volume in Latin America, and the top consumer there is Mexico. Now, let's look at it from a revenue perspective, and if profit looks interesting for that region, I highlighted it. So first, 35% of revenue comes from North America. 17% comes from Europe, Middle East, and Africa, but 29% of profits come from that region. 12% of revenue comes from Asia, and the profit's about in line with that. Latin America is interesting because pricing power and profitability is super high. It's double, 11% in revenue and 21% in percent of total company profit. And then finally, the bottling investment group, where they're investing in bottling companies, brings a lot of revenue, but very small amount of profit in 2022. And then the rest, 7%, comes from global ventures. Now, the Coca-Cola company has a massive number of products worldwide, as you can see, from alcoholic beverages, sparkling water, or sparkling drinks. Of course, the Coca-Cola brand is part of that. Juices, water, and coffee. Let's talk about coffee for a second. Costa Coffee was a British multinational coffee house chain founded by two Italian brothers, Sergio and Bruno. And they moved to England from Italy to bring high-quality coffee to the British public. In 1978, they opened their first store to showcase their coffee to the public. And in 1995, Costa was acquired by Whitbread, a British hospitality company that helped Costa expand in the UK and internationally. Now, I just thought it was an interesting thing that the old factory of Costa Coffee was in the south of London. In fact, I just went searching for it, and I saw that there was an advertisement for it to be rented. This may be a little bit old, but from Seville. And in fact, there's a picture of the old factory. Why am I showing this old factory? Because I remember going to this factory myself in probably 2008 or something like that, when my coffee business, Coffee Works, when we were, looking at potentially doing some cooperation for roasting in relation to Costa. Those were a long time ago, but that was an interesting point. I remember walking straight in there and having a tour of that whole factory. Now, why is Costa important? Because in 2019, Coca-Cola Company bought Costa Coffee. Now the company has nearly 4,000 Costa Coffee shops and over 14,000 Costa Express self-serve coffee bars worldwide. And Costa's portfolio also includes ready-to-drink and at-home coffee solution. Here we can see the Costa Coffee Smart Cafe, and this is a vending-style innovative machine that they've got. So this is one of the brands that Coca-Cola delivers. So what is Coca-Cola's competitive strategy? Well, first, as we've seen, Coca-Cola was founded many, many years ago. It's in the consumer staples sector with about 86,000 employees and about $33 billion in revenue. The main segments, Coke and Sprite and Fanta, are some of the biggest producers. And what is its competitive advantage? Well, competitive advantage through an iconic brand recognition and extensive global distribution network and diverse portfolio of beverages. And how was this achieved? Well, it was achieved by strategic marketing, brand management, investing in bottling partners, and continuous product innovation to meet evolving consumer preferences. So Coke was the longest running sponsor of the Olympics since 1928. So one of the reasons why Coke is so successful is excellent sponsorship. Also, advertising. It's got the largest advertising budget of any beverage company. Also, we can say it's dominating in non-alcoholic beverages. It's a top soft drink ranking, most consumed soda in the world, 44% market share of global sales in the non-alcoholic beverage industry. These guys are focused. Here we can see, in fact, and this comes from Statista, and this is the most valuable soft drink brand in the world by far. Coke ranks, number 1, and Diet Coke number 9. And so it gives a picture at how much the Coca-Cola brand value is estimated to be almost $100 billion in value for that brand. Including Diet Coke, it's about 106. And number 3, Pepsi, including diets, is estimated to be worth only $19 billion. Now, one of the things about Coca-Cola is they stay focused on beverages. Pepsi is a more diversified business with snacks. So what's the latest news? Well, quarterly results that came out third quarter of 2023 showed that the EPS of the company was up about 17% year on year. And for the 9 months, it was about 79% of what I was forecasting when I'm looking at some valuation here. This gives a picture. Now, also, it's important to note that the gross profit margin of this company is 61% as of third quarter 2023. That's incredible when you consider the average company in the world over its life cycle, basically, or the economic cycle, we're talking about 6%. So fantastic. 30% for gross profit margin, and they're at 60, meaning they're double. Coca-Cola plans more price increases, and it's leaning on its marketing and, of course, its brand value to manage that. But the question is, does this lead to a competitive advantage? In other words, is the company financially world-class? Well, here's the method I use as an investor and business owner to measure whether a company has a competitive advantage. The world-class benchmarking scorecard that we've developed about 10 years ago. So this is how I construct a scorecard for any company. I gather the yearly and quarterly financial data of 26,000 companies worldwide, and then calculate each company's profitable growth score, which is a composite measure of both profitability and growth. And after that, we rank the subject company relative to sector peers of a similar size, and we do a decile ranking. Number 1 would be best, and number 1 or 2, I would say, is financially world-class. And then we assess the company's performance over the prior 4 years and the past 12 months to take into consideration the quarterly performance. So is the company financially world-class? Well, let's look. Here we can see when we benchmark Coca-Cola against 560 large consumer staple companies worldwide, it's ranked as a 2. So 1 or 2 is financially world-class. Yes, 2020 was a bit difficult, but really it still maintained its profitability very well. So the answer to the question is definitely this company is financially world-class. So now let's look at Pepsi for a minute. And here we can see the net profit margin of Pepsi is about 10%. Still, that's a respectable margin when we think the average margin of a company in the world that's listed in the stock markets is about 6%. But Coca-Cola is 25% and now 22. That's why I say for every $100 of product that, or $1 of product that Coke sells or that you buy from Coke, almost $25 is going into the pocket of, or the profit of Coca-Cola. Is your company financially world-class? Just message me and I'll send your score for your company. What about the valuation? Well, this company's free cash flow is so clean. Basically, almost all of its net operating profit after tax flows through to free cash flow because it doesn't require a lot of working capital, and also because it doesn't require a lot of investment. Now, a lot of that investment is put down into the subsidiary level where the bottling is, but still, they own those, and that's consolidated in here. So it's just an amazing brand, and that's why Warren Buffett likes it so much. If we want to look at a discounted cash flow analysis, I've used a cost of equity of about 9.5% and a cost of debt of about 2.7, which gives me a weighted average cost of capital of about 8.2. And that basically puts it for free cash flow to the firm or free cash flow to equity pretty close, $43 to $47. And that's very close to where the share price is right now. Of course, the dividend discount value is the value of the flow of dividends that you expect to get from the company, and that's worth 34. If we just compare and look at the PE ratio, it's about 19 times compared to about 19 times for U.S. consumer staple companies. But Coca-Cola is producing a superior level of growth, and that's the reason why it can command a pretty high PE. The price to book ratio is 9 times versus 5 times for the average U.S. company, but profitability, meaning ROE for Coke, is about 46%. That's incredible. It's extremely high, which is double the average for the U.S. And so I would say that Coca-Cola actually is starting to look interesting from a price perspective. So what is your company worth? Well, message me if you want to discuss. And that wraps up my case study on Coca-Cola. And I hope that you learn from it. I'll see you in the next case study.